This is Fintech Chatter, presented by Tier 1 People, leaders in Fintech executive search. And I'm your host, Dexter Cousins. Today, I'm joined by Mark Fordree of Ignition Advice. Founded in Sydney in 2014 by Mark and Mike Giles, Ignition Advice is a global leader in digital advice technology. Ignition offers a full end-to-end platform for enterprise and recently entered the European market, establishing new teams in London and Edinburgh, and following a successful Series B fundraise with Morgan Stanley. Ignition are well funded to support business development, product research, and accelerate their global growth. Welcome to the show, Mark.
Thank you very much, Dexter.
Great to have you with us. Could you tell our listeners a little bit about Ignition and what you do?
Yeah, sure. So Ignition, its primary role is building technology which digitizes financial advice, personal financial advice. What makes us a little bit different is that we're product agnostic and we help institutions who don't have the capacity or the appetite to build this themselves, but they need a bank-grade system.
So how did you get started with Ignition?
I actually had a fairly long career in the traditional big businesses, the UBS, ANZ, ABN AMRO, in institutional sales and stockbroking and that sort of thing. And I actually ended up having a bit of a stint in biotech, and that led me to looking at fintech as a big opportunity without the regulatory environment in the sense of drug development, which is quite difficult. So I started looking at a lot of early stage fintechs in Sydney and Melbourne, and came across the Ignition platform, which really was perhaps 3 or 4 years too early, but that's certainly paid dividends now.
Awesome. So can you tell us a little bit more about the kind of, the business, where you're based, how many staff you've got, where you're at in terms of the kind of journey of the business?
Yeah, certainly. So the business is really starting to mature probably about 18 months ago. That was characterised by Ignition winning a global RFP for the Bank of Ireland. And they wanted to bring digital advice and to some extent that data analytics piece across their whole retail business. And that's really allowed Ignition to build itself into a bank-grade solution. And bank-grade is an often overused word. Everyone says they've got a bank-grade solution, but what that really means is that we've got a system which is good enough to satisfy a Tier 1 European bank all around that risk and compliance. Being a Tier 1 European bank, we've had to meet the standards of GDPR and ISO 27001, etc. So, and these are pretty hard standards to achieve, and it's also a continual audit process where it's not just here's your license, go for it. It's a continual audit process where they test our system.
What have been some of the biggest challenges working with a major European bank?
Look, I think it comes around. It's a characteristic which a lot of large enterprises share, and that is that they're generally oil tankers. It's taken a long time to get to where they are, and they're typically built on big legacy systems, and interacting with that sort of monolith when you're a small company is reasonably difficult. I think one of the most important things that all companies that are playing with the big end of town have to to make it a successful project is having a really good sponsor on their side of the fence where you have a shared vision.
Touched on this earlier. You moved out of a career in banking and a little foray into biotech. How do you think that's helped you navigate the world of fintech?
Oh, look, it's certainly given me the tools to understand. Asking yourself the big questions. What problem are we trying to solve, and
Yeah.
and why is it a business? Because if you don't have deep insights into those two questions, then the risk of you scuffing your knees pretty badly,
Mm.
which means losing other people's money, is too high for me.
How have you how did you find making that transition? Because it's not an easy one to make. We get a lot of people approach us. I'd say probably about 90% of the people that approach us are trying to move out of financial institutions where they've spent their whole career. We kind of say, look, working for a fintech startup is not the right move right now, because it's just too big a jump from going from somewhere where everything's set up, you got all the support, you got the infrastructure, to going into something that is just so, it's chaotic, right? How
Yes.
have you kind of found making that leap?
Well, I guess it was a two-stage step for me.
Yeah.
I had 5 years in biotech, which was largely working with scientists uh, who are often bad businessmen, um, looking at a really smart piece of science and trying to commercialize it. That was a very difficult gig, because without a pharmaceutical industry in Australia, they tend to build things hoping someone's going to buy it rather than
Mm.
building something which they know someone's going to buy.
Yeah.
But that really taught me about what we were talking about earlier, which is why is this a business? Who's going to buy it? How much they're going to pay for it?
Yeah.
What's the better outcome we're going to achieve, which makes it compelling, and how does it fit into a regulatory environment that should be supportive if it's a smart idea?
Yeah. It's interesting you say that, right? Because actually one of the points that I make to people when they are looking to make the move is, hey, well, can you show me where you've created value for your organization? And they'll talk, oh yeah, profit increase of 20% in last year. Oh great, how did you do that? I stripped about $1 million of costs out of the business. And it's like, whoa, we ain't got anything to strip out of this business. It's kind of, you need to show me where you've actually made money, not just kind of stripped cost out of a business. I think it's a really kind of interesting point that you're making, a valid one of that getting that use case. And actually, I think it was the chief commercial officer of Klarna said this a couple of years back, and it's really stuck with me. He said, "Hey, what do you put your success down to?" He said, "Look, we always taste the food before it leaves the kitchen." And I think that's one of the biggest challenges or dangers I see with a lot of fintech startups is, they're not actually tasting this product and saying, "Hey, would I use this myself?"
Yes, yes, 100%.
Now, I wanted to talk a little bit more about the Ignition platform, because when you and I were first introduced to each other, I was really, fascinated by the AI component and could immediately kind of see, wow, like this is huge. Do you want to maybe tell our listeners a little bit more about how the platform works and some of the other stuff you've been doing around AI as well?
Yeah, sure. I mean, I'll preface it by saying that the introduction of AI into our platform is work in progress, but it
Mm.
is it's well off the ground.
Yeah.
So I think maybe the easiest way to look at it is, okay, what's the traditional way of delivering advice, and in a bank environment, it's taking your let's say top 10% of your customers and taking them through a human advice journey, statement of advice, charging them, somewhere around, I think the average price of advice in Australia is about $4,000, and often it'll be into the institutional, the bank's product, and there's not necessarily anything wrong with that. The problem that we're solving is that there's a heck of a lot of those 90% of people who don't receive advice because they're under the threshold of an advisor being able to speak to them because they can't charge them $4,000.
Yeah.
Who would actually really like advice and need advice. So we're using our decision engines to tap into an institution's existing database and helping their existing customers take an advice journey which is in their best interest. So that actually does add a lot of value because the people actually do need to be they do need help. And people don't wake up in the morning thinking, "Oh, I need an insurance product today." But as an example, we can look at a bank's database. We can score its whole customer base for their propensity to do something, and that might be picking somebody between 28 and 38 with a certain income bracket, a mortgage and kids, and there's a very strong argument that they should have income protection insurance at least till the kids grow up. But the proof of the pudding is in the conversion data that Ignition's generating, and we're getting very high conversion numbers of people that do our journey. But I think from the institution's point of view, we're generating a significantly higher level of sales to previously unadvised clients. And, the asset that the institutions have is the same problem that every fintech's trying to solve. They've got the customers and they've got their data. They just need a way of talking to them.
Yeah. It's we've heard a lot about robo advice, and it's kind of goes on its kind of journeys, and it's popular 1 minute, not so popular the next. What's your kind of view on where Ignition's playing, and do you see yourself as robo advice, or do you see it as being a lot more than that?
Yeah, so look, we don't really like the term robo advice at all. The reason we don't is that 90% of robo advisors out there are using a fairly simple risk scoring methodology to put people into some risk weighted ETFs or managed funds, and that's not what we do. What we do is we have what we call hybrid digital advice journeys, which can be used by an advisor. It can be used as a self-serve by a customer, or it can be done together. We pre-fill in a lot of the profile by tapping into the institution's data set, and we create a full audit trail from end to end as to product appropriateness and strategy. We're product agnostic. We localise the system to the country's regulatory environment, and it's because we solve for wealth, we solve for pensions or industry funds, super, and we solve for insurance. That generates a lot of data about an individual, which may well influence the final recommendations that are made.
Well, we're going to take a quick break. When we come back, I'm going to ask a favour of you. So my boy Harry, who's 8, listens to the show, and he's got his own aspirations of having his own fintech. So when we come back, I'm going to ask if you've got any advice for Harry, and then we're going to have a little bit more of a chat around the superannuation industry that you just touched on as well, Mark. Tier 1 People helps world-class fintech launch, scale, and innovate. As the fintech industry in Australia begins to mature, many of our early startup clients are now becoming enterprises. And as fintech goes mainstream, many enterprises are reinventing themselves as fintechs. Tier 1 People proudly works with companies at the forefront of fintech innovation. Our clients include international fintech, corporate ventures, big tech, tech platforms, banks, payment providers, and financial institutions. We're about to kick off a number of searches for program and project management professionals to deliver significant acquisition, integration, and change programs. We're interested in talking to talent with expertise in merging fintech startups with banks, technology integration specialists in lending and banking, and those with expertise in transforming legacy financial services businesses into fintech. If you'd like to be on our radar for these upcoming opportunities, go to info@tier1people.com. Well, welcome back to the show, Mark.
Thank you.
We're going to, I promised Harry would have a bit of advice from every guest. What advice have you got to share for Harry if he's got aspirations of his own fintech startup?
Look, I think that there's probably 3 points, and two of them we've touched on, but I'll repeat them. It's what problem are you solving, and understand the business case. But the third thing, which I see lacking in a lot of fintechs, is having adequate funding to see the journey through. So the three things are absolutely connected. If you don't have that business case, you won't get the funding. And if you're not solving a problem, then it's not a business.
Awesome advice there. And Harry, I'll say this to your son. If you don't come to your dad first and ask him for his money, it's not a good enough idea. We just touched on the something that I think is a really great use case for Ignition, which is the audit trail that it leaves behind. The resounding kind of message that came out of the Royal Commission was a one where risk, compliance, advice, it really needed to be fixed. How do you see Ignition kind of tackling that problem?
So I actually think we've already completely solved that problem, because the system creates a full audit trail, which allows the institution to set the guardrails, because it's generally their license. So I don't really see that as an issue. My observation is that we're getting our best traction in markets that have already got open banking.
Right.
And that's the motivation for these large institutions to get on board with tech, because if they don't serve this sort of technology up to their clients, someone else will.
Yeah.
And Australia. I mean, open banking's coming. We all know that, but it's not here yet. Not really. So I think that urgency will come into this market. NAB's recent purchase of a neobank, etc., all points to the institutions positioning themselves to play in this domain.
Yeah.
But I don't think we're seeing a consistent message from either the regulators, the government, or the institutions. The Royal Commission, that it was probably a little bit of a blunt instrument reaction for the institutions just to basically pull out of advice and etc. But we have a different view of product manufacturers selling their own product. We actually don't think that there's anything wrong with that if it's done appropriately, and you've got the audit trail to back it up.
Interesting that you mentioned open banking, because the superannuation in market here is way bigger than the banking market, and yet there doesn't seem to be really any innovation happening at all within super. We've had a few kind of take a shot, Grow, Zupa, Spaceship, but we've really not seen a great deal more of really kind of tackling the super industry and providing, a more appropriate solutions. It feels like everything that we've seen so far has been maybe a digital version of an analog process or product. What's your view as to the opportunities in the superannuation industry here in Oz, and how do you think you can capitalize?
It's a long conversation,
Yeah.
which we don't have time for. But look, it's a really complex area. The way the funds are run, the government's approach to the industry funds, the retail versus super in the shadow of the Royal Commission. There's some really complex issues there. The intra-fund advice, or maybe we don't all know, but most of these industry funds are running a advisor per member ratio of 100,000 to 1.
Wow.
There isn't the whole approach of helping a member in their individual circumstance broadly doesn't exist. There's certainly some industry funds who have some good talent on the advisor front, but a couple of industry funds who we work with, we've got average balances generously, say 30 or 40,000 average per member. And you can't put a human advisor near those people because who's going to pay for it? You can't expect unadvised members to subsidise advised members. There's not enough fees per member to pay for that sort of advice. It has to be technology. There is a couple of industry funds who certainly get where this is going and are actively doing stuff now. And there's a couple of industry funds that we're talking to who know that if they don't get a more personalised relationship with their members, then they'll probably move, particularly the younger ones. And member retention is probably the number one issue with every industry fund in Australia.
What do you put that down to?
It's pure maths. It's the higher balanced members who are most likely to go to an SMSF.
Right.
And you might need, 5,000 new employees to replace one lost to a SMSF.
Wow, that's hard work, eh?
Well, it's, as I say, it's the biggest problem because you got to serve all those little customers who aren't really contributing anything. So part of the answer is engaging your membership and actually delivering them personalised advice, which adds value. I mean, we actually don't think it's that hard, but it's not culturally something that industry funds do.
So, other than Ignition, which other fintechs got you most excited this year and why?
Oh, look, it'd definitely be what we're seeing in AI. We firmly believe that we're absolutely at a tipping point now. Where we're going to look at this whole period as pre-AI and post-AI, and there's 5 drivers of why it's now, and in a nutshell, it's the Internet of Things, it's 5G, it's big data, it's AI, and it's elastic cloud. And when you put all those things together, you all of a sudden you've got autonomous cars. You can move big lumps of data in real time, and it's that last thing, it's that 5G which is the big enabler. So I think we're going to see enormous change in every industry and government, and it's certainly something which I can't see why you can't have a 24/7 financial coach on your app on your phone, looking at every transaction you do, and advising you, when you're on track, off track, ahead of track, etc. And I think it'll be free.
Yeah. I absolutely agree with you, and I've been saying this for the last 5 years to people, particularly where it's their careers that are concerned, is that, look, your career is at threat. If you're if you're in, wherever it is, risk and compliance or whatever, and you're a spreadsheet jockey, and most of what you're working on is Excel spreadsheets, you've got no future, right? It's gonna the power of AI is gonna be taking that over, and what's taking 20 people, you can have one person augmented by AI. But I keep getting hit with resistance that, the legacy systems, it won't work. It's never going to happen. Legacy systems are too old. It's too expensive to replace them. What's your message to those people who kind of believe that, these 50-year-old systems are still going to be doing the grunt work when we move into this world that you've talked about, which is like literally, it's happening now, right? It's not something in the future. It's actually happening now.
Well, 100%. And I think the biggest challenge that a lot of senior company executives and directors that I talk to have is that, and I'm an alpha, but this is really emerging space, age technology that they quite frankly don't have a handle on. I can go and talk to 10 people and ask them about their understanding of machine learning or deep learning, and 90% of them would give you a blank look. And it's not that they're not interested; they've had an exposure to it. And we've got this other problem in Australia. We've got a really, really small population of people who've got a high level of expertise. And they're all from the private sector, because that's where they get paid. Look, it's absolutely is inevitable as the sun coming up, and the companies that look at cloud. That's a perfect example. Yeah. So we've gone from an environment, let's say 10 years ago, where no one wanted to use the cloud. Everyone was having big, expensive data centers on premise. The drivers of cloud, being everything from security, speed, but especially cost, not having to provide any hardware, and efficiency, are so great that if you're not on the cloud and you're using a lot of data, then again you're probably not going to be able to compete going forward. And the next gen cloud we're seeing now, this hybrid cloud having a private on premise cloud capacity, that's going to break down a lot of the barriers that people have had to put stuff in the public cloud. Yeah. So this, as I say, it's not one or two things. It's the combination of all five, I think, which is so powerful.
Yeah, and look, if you kind of look at most of the stuff that we've seen in innovation, as one of our previous guests said, Edward at Razor, said, look, what we've seen so far is just the computerization of old business models.
Yes.
Digital is very different, right? You're going to have products built for digital life. You're going to have systems built and processes built for digital life. And it's true, right? When you think like everything that I do is exactly like I used to prior to computers, fill in a form, give in all the information, send it off, have somebody look at it. That's all prone to errors. It's all prone to risk. It's all prone to fraud, to security, all of those issues. And this world that we're actually in now, none of that stuff's relevant, right? It's like it's a kind of analog process and system for this world that you normally see in a science fiction movie, and it's kind of here now.
Absolutely, and you start listening to Musk about connecting our neural networks up to machines and things. It is actually very scary. I think there's a very, very scary side to all this, but regardless, it's happening now, and education is a big issue.
Absolutely. Well, I guess we're going to wrap up now, Mark, but before we do, what can we expect from Ignition in the next year?
Look, from what we're seeing now, we're starting to see, we're actually starting to see a number of big global firms reposition their distribution arm to embrace digital technology. So I think we're going to see that big transformation. And once it's done, once 3 or 4 do it and lift their product sales from 2 or 3% annual growth to 33 or 40% annual growth, then everyone will do it. It'll just be a tipping point. And I think we're on the brink of that now.
That's fantastic. Well, look, good luck with that, Mark. It's been great to have you on the show. If people want to find out more about what you're doing at Ignition, where do they need to go?
Probably our website is the best place to start, which is ignitionadvice.com. And there's lots of links there and information about what we do.
Thanks for being on the show, Mark.
My pleasure. Thanks for having me, Dexter.
And you can find me on LinkedIn or follow the Tier 1 People LinkedIn page. Thanks for listening. And if you like today's show, please subscribe to the podcast. And don't forget to leave us a review because it really helps me bring on great guests like Mark. This show is produced by Tier 1 People, leaders in Fintech executive search. We'll help you launch, scale, and innovate by delivering world-class talent. And you can reach us, info@tier1people.com. Until the next episode, stay safe